The fastest way to blow up your account is to try growing it fast. The fastest way to actually grow it is to stop trying completely. You probably felt it. That burning need to turn your small account into something meaningful. Fast. The mental math runs automatically. If I can just make 10% a week, in 6 months and suddenly you're not trading anymore. You're chasing a fantasy that destroys every account it touches. There's something strange happening among the traders who actually make it. They're not moving faster. They're deliberately moving slower. And somehow, that's what gets them to profitability years before everyone else. The tax you pay for speed. Think about the last time you tried to force a trade to work. You saw the setup developing. It wasn't quite there yet, but your mind started calculating the profit potential. You imagined how good it would feel to be right, how much closer it would bring you to your monthly goal. So you entered early. Because waiting felt impossible. What happened next? The market probably chopped around, hit your stop, and then went exactly where you thought it would. Without you. That's not bad luck. That's the tax you pay for trying to trade fast. Speed in trading isn't about how quickly you execute. It's about how quickly you need results. And that need? It rewires everything. Your pattern recognition changes. Your risk assessment breaks. Your discipline evaporates. All because somewhere in your mind, there's a clock ticking. The urgency you feel isn't making you more focused. It's making you blind to the very signals you need to see. I watched this play out with someone I used to share an office with back in 2019. Call him Dan. He'd been trading for 2 years, working a night shift at a warehouse, so he could trade the London and New York sessions. The guy was sharp. He understood market structure better than half the people with $100,000 accounts. His screen recordings showed clean entries, solid risk management, the whole package. Except his account never moved. He'd start the month up, ended down. Sometimes he'd string together 3 winning weeks, and you'd think he finally cracked it. Then one bad Friday would erase everything. The problem wasn't his system. It was the warehouse job, or more specifically, what the warehouse job represented. Every night, he clocked in felt like failure. Every morning, he left exhausted felt like he was running out of time. He'd calculated that at his salary, accounting for rent and bills, he had maybe 18 months before he'd have to give up on trading and get serious about a career. So he traded like someone drowning. He'd take the first 2 setups of the day regardless of quality because he couldn't afford to miss profit. He'd hold losers through his stop because realizing the loss meant accepting another day of being stuck. He'd revenge trade after a bad morning because going to work after a red day felt unbearable. Then the warehouse promoted him to supervisor. Better pay. Day shift. Weekends off. He was furious. It felt like handcuffs. Now, he could only trade the last 2 hours of New York, and he'd need this job even longer to save the same amount. A weird thing happened over the next 4 months. With only 2 hours to trade, he couldn't afford to take mediocre setups. He'd miss entire weeks because nothing good developed in his window. Some days he'd watch his screens for 90 minutes and close them without taking a single trade. At first it felt like torture, then just felt normal. His win rate climbed from 51% to 67%. His average winner doubled because he stopped closing them early to lock in profit before work. His drawdowns got shallow. By month 4, he'd made more than the previous 8 months combined. Not because he found better trades, because he could only take the obvious ones. When he finally quit the warehouse job 18 months later, his account was 12 times what it had been. And he was terrified, because now he had all day to trade, and he knew exactly what that meant. More time to mess it up. He set a rule: only trade the same 2-hour window. 2 p.m. to 4 p.m. Eastern Standard Time, 5 days a week. Everything else, the account didn't exist. He still follows that rule 4 years later. Still profitable. Still only trading 10 hours a week. That story isn't unique, by the way. I've seen variations of it play out dozens of times. The pattern is always the same. Someone gets forced into constraints. Less time, less capital, less opportunity. And somehow those constraints become the thing that finally makes them profitable. It's counterintuitive. More time should equal more opportunity. More opportunity should equal more profit. But it doesn't work that way. Because more time just means more chances to sabotage yourself. Your brain wasn't designed for probability. It was designed for immediate threats and immediate rewards. When you introduce urgency, you activate the exact neural pathways that make pattern recognition impossible. There are studies on decision-making under time pressure that show something fascinating. When people are told they need to make quick decisions, their brain's prefrontal cortex shows reduced activity. That's the part responsible for complex analysis and impulse control. Meanwhile, the amygdala, the fear and emotion center, lights up like a Christmas tree. You're literally making yourself dumber every time you feel rushed. And trading with growth targets? That's putting yourself in a state of permanent urgency. Every trade matters too much. Every loss is a setback to the timeline. Every winner that could have been bigger is a missed opportunity that delays the dream. The market doesn't care about your timeline. It moves at its own pace, creates opportunities when it wants to, and punishes anyone who tries to force it into a schedule. Something shifts when you remove the speed. When you genuinely stop caring how long it takes, you suddenly start seeing things you've been blind to for years. You notice that your best trades are the ones that develop slowly. The ones where you had to wait through doubt, through boredom, through that voice saying this isn't going to work. You realize that the setups you rush into, the ones that feel urgent and exciting, they almost never work. The excitement itself is a red flag. Because if it feels that obvious to you, it felt obvious to everyone else 3 candles ago. The market rewards patience in a way that has nothing to do with virtue or discipline. It rewards patience because patience is the only state of mind where you can actually see what's happening. Think about a chess master. They don't play fast because they've memorized more openings. They play fast because they've trained their pattern recognition so deeply that good moves feel obvious. But that only works because they spent years playing slowly, analyzing, making mistakes, learning to see the board the way it actually is, not the way they need it to be. Trading slow is training. Trading fast is testing. And most traders spend their entire career in test mode, wondering why they keep failing. There's a concept in sports psychology called the performance paradox. Athletes perform best when they focus on execution rather than outcome. The moment they start thinking about the score, about winning, about what success will mean, their performance degrades. Their movements get tight. Their decision-making gets reactive. They stop being in flow. You can see this in basketball players at the free throw line. The ones who think about the percentage, about the game on the line, about what missing will mean. They miss more often. The ones who just go through their routine, the same way every time, regardless of the situation, they're consistent. Trading works the same way. The moment you focus on growing the account, you stop focusing on executing well. And execution is the only thing you control. But your mind resists this. It wants the goal. It wants to know when. It wants the timeline and the milestones and the proof that this is all going somewhere. That resistance is the problem. Not because wanting success is wrong, but because trading doesn't reward wanting. It rewards seeing. And you can't see clearly when you're looking through the filter of, how does this get me to my goal faster? How many times have you taken a trade, watched it go slightly against you, and felt that spike of panic? Not because your system said it was wrong, not because your stop was hit, just because losing on this trade would set you back. That's the speed trap. You're not reacting to market information. You're reacting to the gap between where you are and where you think you should be. And that gap makes you bail on trades that would have worked and hold trades that should have been cut. Now imagine trading without that gap. You take the setup because it's there. It goes against you. You feel nothing, just information. Either the stop hits or the trade develops. You have no attachment to which one happens because there's no timeline being violated. How differently would you trade? Most traders think the solution to slow growth is better setups, bigger size, more screen time. They're solving for the wrong variable. The growth isn't slow because you're not trying hard enough. It's slow because you're trying too hard. The effort itself is the friction. There was a study done with day traders, tracking their profitability against their trading frequency. The correlation was brutal. The more trades per day, the lower the profitability. Not just because of commissions, because overtrading is always driven by urgency. The traders who made money weren't the ones who found more setups. They were the ones who let more time pass between trades. Who could watch the screen for 6 hours and take 2 trades? Who could go 3 days without a setup and feel fine about it? That's not discipline in the traditional sense. It's not gritting your teeth and forcing yourself to wait. It's genuine indifference to the passage of time. Because when you're not trying to grow fast, there's nothing uncomfortable about waiting. Let me give you another example. There's a prop trader I know who trades only Wednesdays and Thursdays. That's it, 2 days a week. He watches the market Monday and Tuesday, takes notes, identifies what he thinks will set up. Then Wednesday and Thursday, he executes. His reasoning? Monday is unpredictable coming off the weekend. Friday is unpredictable going into the weekend. Tuesday is usually just an extension of Monday's mess. That leaves Wednesday and Thursday as the only days with clean, readable price action. Is he right? Maybe. Maybe not. But it doesn't matter, because the constraint forces him to be selective. He can't overtrade when he only trades 2 days. He can't revenge trade because if he blows up on Wednesday, he's got one more day and that's it for the week. He can't chase because there's always next Wednesday. His account has grown 890% in 3 years. Not because he found some magic pattern that only appears on Wednesdays. Because the artificial constraint removed his ability to self-sabotage. The math itself proves this. Say you need to make 20% a month to hit your annual goal. That's not a trading target. That's a desperation target. The pressure of it guarantees you'll deviate from any system that works. But say you don't have a target. You just trade your edge. Your actual, proven edge, not the fantasy one. And it produces 3% a month. Some months, 8%. Some months, -2%. But it averages 3% because you're not forcing it. That's 42% a year compounded. In 5 years, you've 6x'd your account. In 10 years, you're up 40x. And you did it by giving up on fast. The traders who try to make 20% a month, most of them blow up within a year. The few who survive are usually back to break even after costs and drawdowns. And in 10 years, they're still trying to figure out why it's so hard. Who got there faster? Your mind wants to reject this. It feels too passive, too slow, like you're wasting your youth waiting for compound interest to do the work. But you're not being passive. You're being selective. And selectivity is the only edge retail traders have. The institutions can't wait. They have quarterly reports and investor expectations and capital requirements. They have to trade. You don't. You can wait for the setup that's so obvious even a mediocre entry makes money. You can skip the choppy days, the uncertain conditions, the trades that might work but probably won't. You could do nothing for as long as nothing is the right play. That's not a disadvantage. That's a superpower. And you trade it away every time you try to speed things up. Think about what changes when you remove the growth pressure. You stop caring about missed trades because there's no quota to fill. You stop holding losers because there's no monthly target they're ruining. You stop overtrading because there's no urgency. And suddenly, you're just responding to what the market is actually doing. Not what you need it to do. Not what it might do if you're right. What it is doing right now in front of you. That's where edge lives. In the gap between what the market is showing and what most traders are seeing because they're too busy calculating profit potential. The professionals talk about being in the flow. What they mean is that they're reacting to market information without the interference of ego, hope, fear, or urgency. They see a setup, they take it. It works or it doesn't. Next trade. That state is impossible when you're trying to grow fast, because fast requires meaning. It requires each trade to matter. And the moment trades matter, you're no longer objective. I remember talking to a trader who'd been consistently profitable for 7 years. I asked him what changed. What finally clicked? He said it was when he stopped checking his account balance. Not forever. Just stopped checking it during the trading day. He'd look at the end of the week. That's it. During the day, he only tracked whether he followed his system or not. Did he take the A+ setups? Did he skip the B and C setups? Did he manage the trade according to plan? The account balance became irrelevant. And once it was irrelevant, he could finally see the market clearly. He wasn't filtering every price move through, is this making me money or costing me money? He was just reading price, responding to information, executing a process. His equity curve smoothed out almost immediately. Not because he got better at trading, because he removed the psychological interference that had been sabotaging him for years. Most people miss what happens during the transition. What happens when you commit to trading slow for 6 months? Not as a trick to grow faster, as a genuine rewiring of what you're trying to accomplish. The first month is uncomfortable. You'll skip trades you would have taken. You'll watch opportunities pass. Your account will barely move. The voice in your head will scream that you're wasting time. Ignore it. That voice has been giving you advice for years. Look where it got you. Month 2, you start noticing that the trades you're taking work more often. Not because the setups are better, but because you're waiting for them to fully develop. You're entering at the right time instead of the hopeful time. There's a difference, by the way, between those two things. The hopeful time is when you think it might work. When you see the early signs and your brain starts calculating what you'll make if you're right. The right time is when the setup is complete. When it's so obvious that not taking it feels wrong. Most traders never learn to tell the difference because they're always operating from hope, always calculating, always needing the trade to work because they need the account to grow. Month 3, your equity curve smooths out. The wild swings disappear. You're not making huge gains, but you're not giving them back either. Consistency starts to feel normal. And consistency is the thing nobody talks about. Everyone wants the big win. The week where everything works and you make a month's worth of profit in 3 days. But those weeks are rare. And they're usually followed by weeks where you give it all back, trying to recreate the magic. Consistency is boring. Consistent means you make a little, you lose a little less, and slowly the account creeps up. No fireworks. No adrenaline. Just the slow accumulation of edge expressed over time. That's what actually builds wealth. Not the exciting weeks. The boring months. Month 4, you start noticing something strange. You're not thinking about trading as much. It used to consume you. Every waking moment was spent analyzing, studying, looking for the edge you were missing. Now, you trade your session, you're done. The rest of the day, trading doesn't exist because you're not trying to force it anymore. You're not grinding, hustling, pushing. You're just showing up, executing when the opportunity presents itself, and moving on. People around you start getting confused. They ask why you're not trading more, why you're leaving money on the table, why you seem so relaxed about it all. You can't explain it to them because they're still in the matrix, still believing that more effort equals more results. Month 5, you look at your stats and realize something. Your win rate is basically the same as it was 6 months ago. Your average winner is about the same. Your average loser is about the same. But your account is up significantly because you're not giving back your wins on revenge trades. You're not taking low-quality setups that drag down your average. You're not overtrading on slow days, trying to force profit that isn't there. You're just doing less. And somehow, that's making you more. Month 6, you have this moment of clarity. You realize you've been fighting yourself this entire time. The market was never the problem. Your system was never the problem. It was you. Not because you were bad at trading, but because you were trying to trade fast in a game that rewards slow. This isn't a motivational story. This is what happens when you remove the variable that's been sabotaging everything. The speed, the urgency, the need for it to happen now. Trading rewards people who can separate their ego from their equity curve, who can lose on a trade and feel nothing, who can win and feel nothing, who can go 3 weeks without a setup and feel nothing. That's not sociopathic. That's professional. Because in a probability-based game, individual outcomes are meaningless. Only the process matters. And you can't execute a process when you're emotionally invested in speeding it up. The market will give you what you can handle, at the pace you can handle it. Try to force more, and it pushes back. Accept what it offers, and it keeps offering. Most traders think they need to become better at trading. Faster analysis, quicker entries, more aggressive size. What they actually need is to become comfortable with slow, with boring, with the relentless consistency of doing the same thing, the same way, over and over, while nothing seems to happen. That's where wealth gets built, not in the exciting weeks where everything works, in the quiet months where you didn't deviate, didn't overtrade, didn't force it, just showed up, took your setups, and let time do the heavy lifting. The compound effect isn't about interest rates. It's about doing something repeatable long enough that the results become inevitable. And you can't do anything repeatably when you're constantly adjusting for speed. There's a reason most trading books talk about patience. Most trading courses emphasize discipline. Most successful traders preach waiting for quality setups. It's not because they're trying to sound wise. It's because they all learn the same lesson the hard way. The market doesn't respond to effort. It doesn't reward hard work. It doesn't care how badly you want it or how much you need it. It only responds to one thing: correct execution at the right time. And you can't execute correctly when you're rushing, when you're forcing, when you're trying to make something happen because you're behind schedule. Here's the uncomfortable truth. Your current approach isn't working. You know it isn't. That's why you're here reading this. You've tried the indicators, the strategies, the courses, the mentors, the Discord groups, the scanner alerts, and you're still stuck, still breaking even, still giving back your winners, still wondering when it's going to click. It's not going to click. Not until you change the one variable you keep protecting, your timeline. Can you trade for 6 months without caring if your account grows? Can you measure success by execution quality instead of profit? Can you watch other traders post gains and feel nothing? If not, you're not ready to make real money yet. Because real money doesn't come from trying harder. It comes from removing the need to try. The fastest way to grow your account is to stop trying to grow your account. Trade your system. Skip everything else. Let time pass. That's it. That's the whole secret. And it's the one thing nobody wants to hear because it sounds too simple, too passive, too slow. But the traders making life-changing money, they all figured this out. They all went through the phase of trying to force it. They all realized the forcing was the problem. And they all made the same choice: trade well or trade fast. You don't get both. The ones who chose well are profitable. The ones who chose fast are still trying. Which one are you going to be? Not in theory, not in principle. Right now, with your actual account, your actual psychology, your actual fear of missing out and falling behind. Are you willing to give up the fantasy of fast growth to achieve the reality of actual growth? Are you willing to feel like you're moving too slow for 6 months so you can move forward for the next 6 years? Are you willing to look like you're doing nothing while everyone else is grinding, knowing that their grind is the exact thing keeping them stuck? This isn't about working less. It's about working differently. It's about understanding that in a game of probability, volume is your enemy and selectivity is your advantage. It's about recognizing that every time you take a marginal setup because you're bored or behind schedule or trying to hit a target, you're not trading, you're gambling with your edge. And your edge, the one that actually works, is fragile. It only exists when you execute it perfectly. Rush it, force it, trade it when it's not there, and it disappears. You already know what you need to do. You've known for a while. Stop the overtrading. Stop the revenge trading. Stop the FOMO entries. Stop checking your balance every hour. Stop calculating how long it will take to reach your goal. Start trading like someone who has all the time in the world. Because in this game, you do. The market will still be here tomorrow, next week, next year. It's not going anywhere. The only question is whether you'll still be in the game when you finally learn to play it correctly. Choose slow. Choose boring. Choose sustainable. Choose to be one of the few who actually makes it. Comment the biggest trading myth that's been holding you back.